these financial who request for these financials as they assess your needs for credit. Also, the other stakeholders may be the law enforcement resource investigators. There are institutions that belong to regulatory institutions like under BOU, under Insurance Regulatory Authority, under WUBRA. So all those institutions that report to a regulator. You have a regulator in the hierarchy of reporting, then you should be able to be attentive today and have an understanding of what it takes for you to come up with a very good report and make sure that the report you submit to your regulators is acceptable and does not bring issues of compliance to you. And this will also enable our audience to gain exposure to what is expected of them when it comes to an audit. We also believe that this exercise will be able to put you on set as regards to step 1, 2, 3, 4, 5 of being able to initiate conversations with your auditors, what you need to have, the engagement letters that you are supposed to enter into their auditors, the initial discussions, the opening entry meetings where you discuss the scope of the auditor. All that will be very important to us and very important to you as well, because we know when you are prepared, our work is made easy and our work is able to deliver value that is needed for institutions we work for. I was just meant to give opening remarks, and I believe that it is time now I hand it over to the team of experts, and we have CPA Sam Odeke, who will be able to take us through the session throughout the day. And we expect those who are able to reach us to come to Buganda Road offices and where you can be received by our teams of experts that have been prepared for this session, and you should be able to come with your questions and let them give you the feedback you need. You can also reach us online. You can send your questions and get answers online today. And if you are not yet updated with you are not okay with the feedback, it's not enough, it's not elaborate, then you should be able to reach us at Buganda Road offices next to CPS, and then after CPS you reach the Majestic Coast. The next building is where you find us located, and we are ready to receive you. Over to you, Sam Odeke. You should take it over from here and ensure that this corporate social responsibility, and that's a pro bono week, is beneficial to our participants today. Thank you. Over to you, Sam.
Good morning, everyone. Thank you so much for joining us for today's webinar. Once again, I would like to welcome you all to this webinar, and I hope that, and I know that it's going to be very beneficial to us all in learning how to prepare for the annual audit. Without further ado, let me introduce to you our panel that we're going to have. First, it's been partner for audit, CPA Samuel Okurapa. Thank you so much for those introductory remarks. And then we're going to have the manager for audit and assurance, CPA Sam Odeke. And then we're also going to have our audit supervisor, CPA Emma Opolot, as well on the panel. Let me briefly introduce to you panelists for today, the major discussants. CPA Sam Odeke is a qualified accountant with the Institute of Certified Public Accountants of Uganda. He's also the manager for audit and assurance at HLB Jim Roberts. He holds a level 2 certificate in tax advisory, still with the Institute of Certified Public Accountants. He has over 6 years of audit and tax advisory experience and 4 years in accounting, 4 years experience in accounting. He has experience in insurance audit, public sector, financial sector, the pharmaceutical industry, the funeral industry, tourism, and much more. He's also an advanced expert and a consultant with several accounting systems like ERP, Oracle, QuickBooks, Institute of Certified Public Accountants. He's also a supervisor for audit here at prior to joining HLB Jim Roberts, he Department of Refugees. In this role, he was instrumental in managing financial records, processing transactions. He also has close to over 4 years experience in accounting, finance. So let me hand you over to CPA Samodeke to take us through.
Thank you. Thank you, Mary Francis, for the introductory remarks. I would also want to add that I am a committed member of ICPAU, whose role is to regulate the conduct of accountancy in Uganda. And with the training that we have organized, the webinar that we have organized for you is to improve on the knowledge base of the accountants who are attending so that we are able to improve the standard of accountancy in Uganda. I am going to be sharing my screen of our presentation. Okay. I'm going to be sharing my screen shortly. Okay, I hope everyone is seeing my screen. Mary Francis, please confirm. Okay, thank you. We are going to be looking at preparation of annual audits. That's our topic of the day. And the first templates are mainly about the fact sheet of the firm and the introductory part. Let me take you to the next slide. Our next slide is our presentation highlights of what we are going to look at. The first one there being a firm fact sheet. The second one being overview of annual audits. The next one, reasons for external audits. The next one there, how to prepare for annual audits. The next one there is general audit requirements. And lastly, closing remarks that will be given us by CPA Samuel Okurapa. Let's go to the next template. The next template is just information about us, what we do, our background, the number of partners that we have, the services we provide, our vision, mission, and our values. The next slide is information still about us. When we started as HLB Jim Roberts, the partners that we have, the staff, the services that we do, the members that we are affiliated, the bodies that we are affiliated to. You can see on the screen CPA Uganda, which is our main regulator. We have SCCA, ICGU, Rotary, among others. Our next template is our next slide is our management team. We have managing partner there, CPA Dr. James Okelo Onyoin. We have Robert Otala, Samuel Okurapa. We also have a lady on board, CPA Ruth Waivale Mwoga, who is a partner for audit. And this one is a contribution to ESG. So socially, the board is well represented. We have also myself there, Manager Audit Services. I am also there. And that is briefly a management team. At this stage, let's go to the next template. At this stage, allow me hand you over to my colleague. Allow me take you, hand you over to my colleague, CPA Emma Opolot, who is going to give us an overview of annual audits later on. That's when we'll invite me also to come back. Thank you. Over to you, Emma.
Yes. Good morning, ladies and gentlemen.
Good morning.
Good morning, ladies and gentlemen. Welcome to this pro bono webinar sponsored by HLB Jim Roberts. I'm going to be taking you through the overview of annual audit. I'm going to take you through the definition where we say an audit is an independent examination of financial records, accounts, business transactions, accounting practices, and the internal controls of an entity by an independent entity, that is the auditor, with a view of forming an opinion as to whether the financial statements show a true and a fair view of an entity. By this we mean an independent person. The auditor shouldn't be an employee of the organization or has any close relation with the organization. We don't want to we do this because we want to promote the independence of the auditor. We don't want to compromise his independence because the opinion he has to give may be compromised because of this close relationship he has with the employees of the auditor or of the entity to be audited. The auditor has to review the whole set of the financial statements prepared by the management of the organization. And by this, it's the management to prepare the financial statements that the auditor will come and review. Now, if the auditor is the one who has prepared this financial statement, we shall not allow him to carry out the audit to prevent the review risk. Because if I prepare the financial statements myself, I cannot be able to review myself. It has to be another person to do the review on me. Now, back. Okay. So we shall go to our next slide, which is the reasons for the external audits. One, we have the Companies Act requirements. For any public entity registered under the Companies Act or any company which is registered under the Public Act, it is required to carry out external audit under Schedule 167 to 170, where an entity is required to appoint external auditors to carry the audit. Tax law requirements. Under the tax law requirement, any entity generating revenue or turnover of more than 500 millions or 500 million and above is required to carry out external audit by the Uganda tax laws. The third one is the board, donor, or by law request. Now for the board. For the board as the authority, actually it's a requirement by the act, by the Companies Act, that the board prepares the financial statements. And at times, because of the busy schedules of the board, they delegate this authority to the management. And upon the delegation of these authorities, they would want to verify whether this authority which was delegated actually meets the policies and the principles of the preparations or the standards of the financial statements. So by doing this, they will require external audit to be done on the financial statements prepared by management. Now for the donors, these are the people who gave us their fundings for various activities. They would want to know whether the funds they gave to us have been actually used according to their requests or according to the reason as to why the funds were extended to us. So they may also require to do an audit to find out that, okay, then by law or by law requests, this is majorly now the statutory audits. It's a requirement by Act that any listed company or any company registered or created by the Companies Act is required to carry out external audits. Funding source requirements. For one to attain or to get a loan from any financial institutions, it is a requirement that one presents audited financial statements. So by this, you need to carry out external audit for you to have the audited financial statements, because now the banks would want to know how you've been performing your financial performance and your financial position. Then if you also want to go public, it is now a requirement by Uganda Securities Exchange that you have to have audited financial statements for you to be listed in the Uganda Securities Exchange. Last one but not the least, financial concerns. This is probably when there is an alert raised in the organization that a fraud might have taken place. An entity may request for external audit to be carried out. By this, the company wants to know the magnitude of the fraud or wants to dig deep and find out how the fraud would have happened. Then to take you back, there are the types of audits that may be carried out. We have the forensic audit that is maybe requested by the courts of law, where an investigation is done to find out how to get the substantive evidence to be presented. We have also got the statutory audits, which are a requirement by law. We have financial audits. We have also compliance audits that are carried out by regulators. We also have the internal audits that are done within the organization. This is just to find out the internal controls of the organization, if they're working effectively. Then we also check on the governance of the organization that is still under the internal audits. So because of that, now it's very important for one to carry out the audits, the external audits on the entity. It is like a post-mortem for an entity, because if you don't check on the performance of your financials or the compliance of your financials and compliance to your regulators, you may be caught off guard. I beg to stop here for now. Let me call in Sam again to take us through the next slides.
Okay, thank you, Emma. Thank you, Emma, for that. Just to add to what my colleague has said, that it is the responsibility of management to prepare financial statements and have them ready for the audit, and for us, the auditors, our work is really to do review of the financial statement. And that one will avoid us from having a self-review threat, which is mainly reviewing, which is simply reviewing what you prepared. It would be very difficult for you to add any input or adjust something because you yourself prepared. To continue to the next slide, we are now going to look at preparing for an external audit. There's a lot that your organization can do to prepare for an audit, and that a lot will result into the smooth flow of the audit from the start up to the end. And I'm sure at the end of the day, you will be able to meet the timelines. Now, the engagement letter is the one that gives us a roadmap or that shows us the direction for which we need to prepare. It's the type of the engagement that will always help us tell us what audit. And the engagement audit, that one for an internal audit, that one for a forensic audit, or maybe money laundering audit, and others. So the engagement letter is very key in preparing us or in making us aware that this is what we need before. This is what we need before we start off the audit. And the engagement letter will help us identify first the audit firm that is handling the audit. Maybe an example could be HLB Jim Roberts. And then also it will also help us agree on timelines. Which period are we auditing? So the period that we always audit for is audits. It's always a 12-month period, which companies are ever using calendar year or financial year for government. And all those are for management of tax purposes. We shall see later down as we move that why others use calendar year and why others use financial year. All that we shall see it as we move. Agreeing the scope, this also helps us to agree on what exactly we are supposed to do or the areas we are supposed to consider during the audit. The next one there is emphasizing the stakeholder objectives. The stakeholders have different interests. Us as auditors, we also have ours. And as a client, clients also have their objectives. So all must be met, and this is specified always in the engagement letter. Key areas for the auditors to consider is also spelled out. As we move also, you'll get to know the mind to use that the engagement is just like a contract that you enter into with a client. So this one really must specify all these items that we are talking about. And the formats of opinion. At times we have been requested to report as per ISA 800, and at times we've been requested to report as per 702 revised. So at times we need to agree on how best are we going to report. Is it special considerations or not? So this also will help us prepare how we are to report to avoid wasting time during the audit. The next one there is the type of audit to undertake. Of course, I talked of the different types of audit. It can be an external audit or internal audit or forensic or money laundering, among others. So this also will help us get to know which type of audit that we are going to undertake so that we prepare in advance. If it is an internal audit, then we shall have to prepare that information that has been specified in the engagement letter. If it is external audit, then we shall also prepare for it with that information that has been specified in the engagement letter, because these are specific audit specifics that we need to consider as we prepare for audit. Let's go to the next slide. The next slide, we are going to look at how to prepare for annual audits. And the first thing there that we need to look at is ensuring that all transactions are passed through the accounting cycle. Remember, financial accounting, we are reporting on past information. And there is a process that we follow that every good accountant out there should be aware of. Whether you're using electronic softwares, accounting softwares, or you're using manual accounting, the ones of those days, cash books and ledgers, manual books, still this process must be followed. And sure, if you follow it at the end of the day, you won't mess and you will have everything ready at the time when audit starts. The first step there is identification and recording of transactions. First, when you enter into any transaction, when you start off any transaction, then a transaction will have occurred. And when a transaction occurs, then you need to record it. What do I mean? You're going to buy, you're going to the market, or you're going to the market and your intention is to purchase staff welfare items. When you go and purchase staff welfare items, a transaction has occurred. Now, the recording is then recorded in the source documents. And a source document can be either an invoice, the tax invoice. These days, that one is an IFRS invoice, or an e-receipt. The other is a receipt. The other is the debit notes, those credit notes, and others. Those are an example of source documents where the transactions are recorded. So if you fulfill the first step, then you will have the documentation. And during audit, you will have all the documentation that is requested by the auditor, because auditors will always want evidence, and the evidence is a source document. Number two in the accounting circle is preparing journal entries. Here we are looking at books of original entry and prime entry. All these are considered here, and the cash book here is very instrumental. So has the transaction now been recorded in the cash book? And you'll find that if it is an online system or QuickBooks, for example, it also has a QuickBooks, a cash book, and the posting is done there. After that, the next step would be posting to the general ledgers. Now we need to open up these ledgers for each individual item. And that is our step 3 that you must go through. The next step there is generating an adjusted trial balance report. This one is a trial balance without adjustments. So at that stage, you will need to have a trial balance that is reconciling to 0. Remember, you're coming from the general journal, that is reconciling, that must align with the trial balance. A general journal is a detailed breakdown of elements of financial statements, whereas the trial balance shows a summary of information in the general ledger. So these are very important steps, and that is our step 4. Step 5 is preparing our worksheets. This one is like a consolidated trial balance. You have an initial trial balance without adjustments. Then you go the next. You now put there adjustments, and that's where we shall need to track any journals that we might need to pass. So we are preparing a worksheet that we are going to use, which will have a client's trial balance before adjustments. Then we shall have we shall now have their adjustments. Then we shall have a client's final trial balance, which is prepared by the client, which we always abbreviate as PBC. Step 6 is preparing adjusting entries. These are journals that we always pass during the year, and this step is very important. You'll find that during the year, depreciation has not been considered, and this we must pass, or we must consider it before we prepare the final statement. We also have always annual audit fees. You remember, audit is always done after the year end. We shall need also to pass an adjustment for audit fees. And for us auditors, we always don't cheat us. That one, we don't cheat ourselves. That one is always on our mind. That have you passed and accrued audit fees? Have you debited your P&L and you credited your accounts payables with your accounts payables with audit fees payable? So that one is always key to us, and it's one of the adjustments that we need to consider. And any other items that will have not been adjusted during the year. For those who remember our financial accounting one, where they will give you a trial balance and they will give you additional information that during the year, ABC remained unpaid during the year, or wages worth this amount were overpaid by this. That's what we are meaning we are going to do under step number 6, and that's where we shall consider those adjusting entries. Step 7, generating the financial statements. At this stage now, you have the final trial balance with all the adjustments, and at that stage, you should be able to prepare 5 sets of financial statements, which are required by our IFRS standards. For your information, we are now moving to IFRS 18 from IS1. So that is what we shall be doing here. And we are required to prepare 5 sets of financial statements. The first one being profit or loss and other comprehensive income. The second, for those who are in profit making, the second one being statement of financial position. For the third one being a statement of changes in equity, and the next one there are statement of cash flows, and the last one being note to the financial statements. These must be prepared before the auditor starts off the work, and you as a client or you as management, you must have this information ready because it is your role to do this. Step 8 is the closing of the books. That's the final step, and here you're just double checking on any other irregularities that you might have not considered, and putting there the non-financial information, director's report or management report that should be considered at this stage. So that's our process that we must follow and ensure all transactions are passed through this process. Also key to note is that after the audit, there are adjustments that the auditor will have provided to you, maybe because of the wrong treatment that we identified during the audit, or under provision or under estimation of certain elements in the financial statements. Those are also key, and you need to consider them so that during the next year's audit, you will not have opening balance tests. And that is our main area of interest, because we always want to examine, not to check the link between the previous year financial statements and the current year. And if we find the opening balance, the closing balance is as per the previous year, as per the auditor, do not reconcile with the opening balance as per the client. That is an issue number one, an issue that will always move to your management letter. And that issue is opening balance difference. So adjustments must always be shared by the auditor to the client. And if they are shared, the client should be able to pass them so that there is no opening balance difference. Let's move to the next points here. Now, next point there is accounting policy and keeping up to date with accounting standards. Accounting policies, we are looking at how you've accounted for example, maybe PPE, you've accounted for insurance premiums, how you've accounted for maybe IFRS 18. How you've done your stuff. You'll find that under PPE, they will tell you initially you should account at cost. You recognize at cost, measure at initial at cost, and subsequently using the cost model, revaluation model. So these are the accounting policies that we check to see if the client has followed the right principles in recognizing and measuring the elements of financial statements. The other one is keeping up to date with accounting standards. Today, every day, they are releasing new standards. And you as an accountant, you need to have these standards on the fingertips. The latest one that has established so many people and so many clients is IFRS 17 insurance contracts. If you notice, this was effective 2023 January, and if you notice, most of the insurance companies and micro insurances have been affected by this, and up to now you can check the newspaper. Just a few who have published their financial statement, because IRA, Insurance Regulatory Authority, is tight on them to report as per IFRS 17. So you need to keep up to date other than waiting for the last moment on how to apply this. We also have right now IFRS S1 and S2, which are ESG standards. These are also on board effective 1st January 2024. And please don't wait, grasp the knowledge and apply them. Or consult your auditor so that you're able, engage your different stakeholders that you're able to align as per these climate-related disclosures. There is also IFRS 18, it's also on the board, and it's also IS1 has been updated, and you need to check out for when it is effective so that you don't go off track. You apply it so that by the time audit reaches, you're prepared and ready to take it on. And the audit, I'm sure the audit will move smoothly. So we need to have these standards up to date so that we are able to have accurate financial statements. If you also have the tax laws that are being issued, in Uganda, our tax laws are issued year by year, and 2024, 2025 has already been issued, and you need to take note of the changes in the tax legislations that as we run the financial year, you're able to apply, to charge the right VAT, to charge the right income tax, to charge the right payee, and even those in secondary employment, please don't forget them. Also to charge the right withholding tax, and also those others that will have been introduced. This is very key, and this will help us manage the compliance of entities. So take note of the tax regulations. And of course, if you're in a line ministry, if you're being regulated by another line arm, another main regulator, for example, those in insurance are regulated by RRA, please take note of the changes of legislation so that you're able to be up to date with them. You are aware of the new share capital regulations that were issued by IRA, Bank of Uganda, for those in the financial industry, for those in the fintech financial, for those in the forex bureaus. You need to keep up to date with the acts and the regulations so that you're up to date with your financial reporting. The next one there is responsible individuals. Before even auditors, you need to have that responsible person whom auditors will always relay information to. This is like a sharing center, or somebody who is able to respond on behalf of the organization, on behalf of a company, in case there is any question that has been raised by the auditor. This can also act as a collection point of all the vouchers, of all all the source documents and the reconciliations, where the auditor will just pick the documents from them and the audit will move smoothly. The next one there is ensure reconciliation of our accounts. One, if you look at the P&L items, we expect you to have account analysis of each account with its source documents. And then what you would do is to link or do hyperlink so that every transaction month by month is reconciled, and at the end of the day, the total must align to the TB, the ledger amount and the TB amount. This will, if you do this, it will help us, it will help you be able to explain issues as fast as possible, and the auditor will also simplify the work of the auditor, and we should be able to move as fast as we can. If you go to statement of financial position items, we need you to have reconciliations of each individual account. If we look at bank reconciliations, we need you to have reconciliations for each bank accounts, the banker statements, the ledgers for each bank account. Those must be ready before audit starts. Once we collaborate this with that with the bank confirmations, that one should also be organized as fast as possible, that we don't miss out on the timelines. PPE, we expect you to have a reconciliation of the opening balances, the current balances, without leaving out the additions. So this is very important for you to do account analysis of each individual account. Members, don't wait for the last minute, because this is the key. The auditor will ask you questions, as you will see later when we shall look at the general audit requirements, which the auditor will always ask about. Next is to address potential complications throughout the year. Here we are looking at the unusual transactions. There are transactions that happen once in a year. For example, disposal of fixed assets. They happen once in a while. It's not a daily activity. And these activities that happen once in a year also, or once at a time always bring confusion. And as a client, you need to be up to date with that. At this stage, allow me again hand you over to my colleague, Emma Opolot. Thank you.
Thank you for that brilliant discussion. Let's continue. Now, under this identification, which are journals which have been rolled accounting as a result of the matching and revenue most times we follow the IFRS 15 standard, where we have to follow the 5-step model. Now we can identification of the contract, identification of the performance obligation. Then you also identify the transaction price obligation. If all those terms are met, now at the last stage is where now we recognize our the common adjusting journals are the accruals, the deferrals, and the estimates. Under the accruals, we have the accrued revenue. That is revenue and but not yet received or recorded. The most example is the credit sales, that yes, we have sold the goods, but in actual sense, we have not received the revenue. So at the end of the accounting period, a receivable is now received. That is our income is now received. So when we receive it, we have to recognize that revenue. Another one is that those are expenses incurred, but not yet paid for. Probably we have consumed the services and the goods, but we have not paid for them. The most common examples are the utilities, salaries, and the taxes. And the taxes. So we can only recognize them when we have paid them. That's when now we recognize the expense. So another example are the deferrals. The adjusting entries are the deferrals. That is the deferred income or revenue. So these are the incomes we receive, but we have not yet offered the services, or we have not yet received the goods, but we have already paid for them, but we have not yet received the goods. Another example are the prepayments or prepaid expenses. By that, I mean the examples are the prepaid insurance that we have paid for, but we have not yet consumed. Those ones come under prepayments. So at the end of the accounting period, you find now we have consumed the service. We have to now recognize the expense. Now, under the estimates, we have got depreciation. We have got depreciation, which is majorly dependent on the useful life of the asset and the residual value of the asset. Fine depreciation is charged at the end of the month, or at the end of the accounting period. So you recognize that expense of depreciation at the end of the accounting period when you've already prepared the journals. So to recognize that, you have to pass an adjustment. Another one is the provision for doubtful debts, where we have supplied goods, but now as an accountant, you now provide for those long outstanding receivables where you feel you may not recover that money. So you have to pass a provision for that. So when you pass that provision, you have to pass also an adjustment to recognize that provision for the doubtful debt. These are supposed to be done by management, not the auditor. And if maybe the management requests the auditor, there must be consent from management and approval that, okay, help us and pass those adjustments. Another point is the financial reports requirements by IFRS standards. Now, under the financial reports, we expect to find the 5 sets of the financial statements. We have to find a statement of financial position, that is for profit-making organization, NGOs, and other entities. We also have to find a statement of financial performance, that is for profit-making organizations, revenue and expenditure, to find a statement of cash flows. We also have to find the statement of equity. Then on top of that, we also want to find the notes to accounts, showing the breakdowns of those transactions. Now, meeting clients, and our clients also continue engaging us on the progress of the audit. Consultation between the client and the final report is issued. So.
Okay, thank you. Thank you, Emma. Let's proceed. Let's proceed to the next points. The next one there is engaging the group auditors for them to set timelines. In audits where there is a component auditor and there is a group auditor, the group auditor should be able to give the timelines which you are supposed to work on, and also that information which you are supposed to submit to them. The schedules must be shared on time. That's the component auditor considers that during the planning, and execution of the assignments. So this is very key. You'll find this is common with companies where they have parent entities maybe in another country, assuming maybe South Africa, and is a subsidiary in Uganda, or there is something called HQ, and there is something that which is a branch. So there will always be a group auditor who is going to audit the parent company and the component auditor who will audit a subsidiary. So this should be shared in time for proper preparation. The next one there is agreeing on the modes of the communication. At times, clients specify on how best they are supposed to communicate. At times, you agree that we are only going to communicate using office emails and not personal emails. This is for data security, and this is really very key during the preparation of audit. Agreeing on the formats of reporting, I said before that some clients will report as per ISA 800 special considerations, and others use other modes. So it is good also to track this in time to avoid time wasted after that at the end of the day, we are all aligned to one angle. That is what clients should take note while preparing for annual audits. And I want to just add a little to the journals. I'm sure you've always seen auditors requesting for a letter of representation, it is always mainly to show that the client is responsible for the financial information that he or she will have submitted to the auditor, because management will always assert that they have prepared their financial statements without any errors, and they have followed all the assertions. So for us, ours is to receive and check. So where you find that the auditor has even assisted the client, which of course is wrong, you're just supposed to advise. The auditor will always request for a letter of representation showing ownership, showing ownership by management of the financial information that he or she has. That are the areas that you need to look at. Allow me to take you to the general audit requirements, which auditors always ask for from clients, or those that you should take note of before even audit starts, so that you'll actually see that at the end the two are aligned together. And this also should do. You should take this also so that we are able to prepare in time. These general audit requirements are those items, are those elements that mainly, or that information that the auditor will ask you to provide him or her before the audit, or before he or she even starts the planning process, which is our first step in the audit process. And the auditor will always send you a list of requirements for you to provide, and this information must be shared with the auditor for the planning process to start off. The first one there is the statutory documentation. In Uganda, the main regulatory entities that we have is URSB, URA, NSSF, and then the local authority that is under your jurisdiction. For Kampala, in the city square here, we are under Kampala Central Division. So that is the local authority, or KCCA, that's the main, the one in charge for the local authority. And this documentation, any documentation regarding URSB should be ready. Mainly there, you're looking at company annual returns that are supposed to be filed every year, any correspondences of recent you've had, any correspondences of recent there has been beneficial owner. All those that documentation must be ready. Any increase in share capital, any adjustments, that information must be ready. And the auditor will always ask that to corroborate that information with what is in the financial statements. The other is the URA side. The auditor will always need you to have information relating to your taxes, income tax. You know that is a must. Provisional and final taxes. That information should be ready. The filings, that information should be ready. Payee, the client will, the auditor will always expect you to have that information for showing how you filed the pay as you earn, how you filed and paid withholding tax. In case you're also that client who is a VAT registered, the auditor will also expect that information. NSSF, the auditor will expect that you're filing the returns to NSSF, and the employees are benefiting from the 15%, the 10% from the company, and 5% contribution from the employee. So that documentation should be ready, and the auditor should have access to it. Local council, you're also supposed to submit that information and have it ready. Local service tax is always filed in the month of July, August, September, and October. That is if you've decided to break it into 4 installments. However, you can also do a one-off in any of those months, and that information should be ready, and you must have filed using the appropriate rates, the correct rates. So, and of course, if you're operating an online system, you should be able to give access to the auditor, give the TIN number and the password to the auditor, give the NSSF email and the password to the auditor for him to access this information, and also access this statutory documentation so that he better appreciates. So for him to appreciate the evidence that he will have got. If you're also regulated by, if you also have a main regulator, maybe you're regulated with IRA, regulated you're regulated by Bank of Uganda, you're regulated by Communications Commission, NITA, you must also have that statutory information or the filings and the correspondences to that specific body. So the auditor will always ask for this information, and you don't need to wait. You have to organize that information. Number two, the auditor will also ask you for the financial and organization reports. Here, the filing, it will also ask you, because the trial balance is a summary of what is in the general ledger, and the general ledger is detailed. So this information, this is true must tally. Thereafter, you will also request from you the 5 sets of financial statements, which we have talked about, which is the P&L or income and expenditure in case you're NGO, statement of financial position, not balance sheet, because that was amended. We'll also ask you for statement of cash flows. We'll also ask you for not the financial statements and changes in equity. This information must be provided to the auditor because it's the responsibility of management to prepare. You will see that during AGMs, you will see that the accountant or the finance manager is presenting the financial information. And the auditor always, only by practice for us, we give opinion because we all know our responsibilities by law. There is grants and other incomes. We shall need to schedule the different types of grants, the different types of other income, and their schedules and their ledgers, including its source documents. So that one we shall always ask for it. Number 4 is expenditures. Expenditures here, we are looking at the cost of sales, we are looking at the statutory expenses, and the other general expenses. All this should be ready, and the ledgers must be ready. The analysis must be there, all the explanation and their source documents. And if you're up to date with the tax laws, if it is a purchase, it would be better for us to get e-receipts or e-receipt documents. Those ones are very authentic. Please don't go and pick those source documents from NASA Road because they may not pass the test of authenticity of the source documents. So when you go to number 5, we are looking at others. We also expect you to have policy manual and policy manuals, and here that are updated. And here we always ask for a strategic plan. The strategic plan shows the direction which the organization is following or where the organization is moving to. And as the CEO of a company, you must be well versed with what is in your strategic plan because you will be guiding the entity where they are going. And for us, we shall always ask for this document. When you go to finance, we expect you to have a finance and a procedure manual that should have been signed and approved by the board. When you go to human resource, we expect you to have a human resource manual approved and signed by the board. When you go to IT, we expect you to have the IT manual, which is signed and approved by the board. When you go to operations, production, we expect you to have a production manual that has been signed and approved by the board. These are the ones that will guide you in your day-to-day operations because we shall want to understand them, engage with the key departmental employees during management meetings with key management employees for us to understand whether you the custodians of the documents, you know what is in there and where you're going, and then later to also help us under ISA 315 understanding the entity for us to collaborate the policies with the transactions or with the financial vouchers or transactions that you will have done because the two must reconcile. We also expect you to have annual work plans that we shall always ask you. Shall also ask you for personnel files. We need to know the new entrants, the new exits, and this is very important. We expect that in the files that an employee will have showed interest for the job. Also attached here help you know whether the employee qualifies for salary for that month or for that year or not. And we shall also expect you to have a national ID for us to confirm you're a resident. for tax purposes. We shall also expect you to have, if you don't have the national ID, then we shall also ask ourselves, so was this employee considered under the non-residence tax rules? That one will help us in their plan before we even dive into the vouchers. We shall also expect the file to have an NSSF card because so long as you're within the age that it should save, we expect you to have this card. And unless you are beyond the age, the saving age, then we shall ignore, but we shall expect that on file and other information that we shall need. So this is very important for us, and this will also help us in understanding the control environment of the entity, of how the employee was recruited under the recruitment procedures of the entity. Next, we shall also expect field reports for NGOs specifically where you implement activities. Once you go to the field and implement an activity, we shall expect a report of what transpired from the field that must have been signed by yourself and also signed by your supervisor or received by the supervisor. We shall expect this, and of course, they have additional documentation. This will help us collaborate the financial expenditures that you took with what happened in the field to see if the activity lines are aligned. And of course, we also expect any other documents that may be useful for the audit. Annual license for those who are in NGOs, we shall expect you to have filed the NGO bureau. I should also expect capital expenditures during the period. Changes in management, these ones specifically for key management employees, because this will then guide us know that there were changes. There were changes in the costs, employee cost, maybe because of a new entrant, or there was a decrease in the employee cost due to maybe an exit of a new staff. And that will also guide us get to know which qualifications does this person, the person well qualified for the job. Will a person then be qualified for the job? The next there, I think, for now, let me again hand over to my colleague, Emma, to proceed to the next point. Over to you, Emma.
Thank you very much, sir. Now, to add on to what Sam has said, okay, to add on what Sam has said, when we go back to that issue of the grants and other incomes, most times we also want to look at the donor agreements between the account entity and the donors, because we want to look at the terms and the conditions in the contract and the terms and conditions in the expenditure, were they met? Then other incomes, most times we find some entities do investments. They do invest that revenue. And then we also want to find and look at your investment policy. Was it approved by management or by the board of directors? Now, under capital expenditures during the year, we also want to look at the board approval for these capital expenditures, the acquisitions, the additions in the PPE, were they approved by the board? If we want to look at all those board minutes that led to the approval of those acquisitions. Now, actions or status of prior year findings. Now, these are the findings that were found out in the previous audit and put under the management letter. We shall request you for the previous year management letter, and we look at those findings, compare with the findings, or want to see that if there are changes or what we found out was corrected or was put in place. So we will look at that, the status of prior year findings. We want to see, were there changes, were there improvements? If not, we also do recommendations. Now, under employee disciplinary reports, you find that some indisciplined employees would want to see the action taken with the employee. We shall look in the employee file. We would want to find that disciplinary report. which action was taken for the employee. All those things should be in the employee file. Then the service legal agreements with outsourced services. Most times you find we have service providers and would want to look at those agreements between you, the entity, and the contractors or the service providers. You find that most times in the organization we go and audit, they don't have updated service agreements. They will tell you, we have been with this person for long years and we have no agreement with them. It's just a matter of a phone call, but which is wrong. At least ideally we would have to have an agreement between you and the service provider. So, okay. Now at this juncture, let me call Sam to summarize the trial balance. Thank you.
Thank you, Emma, for that. Let's go to some of the trial balance. Just in case you have the trial balance or your trial balance is like that is on the screen, you should then organize that information that is related, that is aligned to your trial balance, because the other was just general audit requirements, but this now is client specific. In case you know very well the trial balance has the statement of financial position part and the profit and loss part. And if you downloaded your trial balance, you will see that the statement of financial position elements will be first up. And the next one, you will see the incomes and the expenditure down. And that one will show. Yes. And that is the and that is what you will see balance. Assuming your trial balance has the property, plant and equipment, assuming your trial balance, I think we shall need you to give us the account analysis or a reconciliation additions during the year. During the year, we shall also expect the depreciation charges that will have been passed. We shall also expect the source documents for the additions. For additions, and we should be able to also verify those additions. So don't keep the additions very far, because we shall need really to prove whether that as the dirty motorcycle that you will have added is really there. We shall need to see for us to confirm its existence. And of course, organize the other source documents that should be available to collaborate with the additions. We shall also check out for the depreciation rates, and find the depreciation rates will always be picked from the financial policy. Those two must match, because you do what the financial policy is the same. Then when we go to cash and banker statements for that, for all the bank accounts, if the account was open that financial year, expect the authorization. Shall expect to see that documentation that shows the authority for you to open that new bank account. We shall expect you to have a bank for all the bank accounts, including mobile money. We shall expect cash count certified that really your hard should be the one that is in your trial balance, your management account. That's what we shall expect. We shall also expect ledgers from you, the client, of those cash bank balances, the movement, able to test some of those items that is sufficient, appropriate, and relevant, and later will help us to make a decision of whether your cash and bank balances are true and fair. When you go to investments, we shall also expect the investment policies, the ledgers, the support, mainly the source documents to the investments item. We shall expect the aging, we shall expect the ledgers, we shall expect it has come from the sales and that one organization. So that is what hear me. We should on sundry data, sometimes we ask for the ledger for the next 3 months after the financial year. Why? We want to check for the subsequent clearance of some of the payments that you have made. And we want also to know whether this data is existing. So we shall ask you to give us a ledger, a general ledger for the next 3 months. If they are paying, and that one help us confirm that the subsequent clearance is okay and the clients are paying. So that is that with the standard data. That is when you go to other to payables and other payables, we shall also more or less the information is the same. We shall ask for the list of payables. We shall also ask for the aging of the payables. We shall also ask for the aging of the payables. We shall also do the payables, the ones that will be above materiality, and those that shall have chosen using professional judgment. And of course, we shall also check the source documents of those specific suppliers who are, whether they are existing or not. So that's what we shall payables, we shall ask for that information. There are those that already will go here, like the NSSF, at the end of the year, you know, we are given 15 days to pay. When you are a payee tax, we are given some time to pay. That's why you will always will have payee and others, especially those regular, because they give you to pay. The entities always pay at the end. We shall check for opening balance differences also here. Shall check for opening balance differences, especially for reserves, revenue reserves, for us to be sure that there's a link between the previous year and the current year, and all the adjustments have been considered. And here we shall check whether the opening balance differences were brought forward correctly. When you go to our incomes, we shall and if before you announce your operations manual, we shall have understood the products that you have, and we shall just collaborate with the ink products. So we shall have that income will have sold, because in mid should be able to collaborate information. Payrolls, we shall also expect this, and always here we expect okay. Okay, sorry for that. The gadgets the network had interrupted me a bit. But under income, we always ask for the sales VAT reconciliation. And here our interest is to check whether the sales per ledger are matching the sales per VAT return, or if these two should reconcile, so that we are 100% sure that you're compliant and nobody will ask you. Local service tax under payrolls, we also expect it to have been filed. And this LST per ledger must also reconcile the LST per return, which you have submitted to the local authority under you. If you go to the others, operating expenses, all those that have the tax element, especially VAT, we shall also look at them. And of course, the other expenditures. Key to note that if you go the P&L side, we shall consider checking all those that are compliance related 100%, because they are in nature compliance and it affects your going concern status of the entity. And of course, and this really will be very important in case your client is specific. In case this is what you have in your trial balance, that is the information that we shall ask you for. I think at this stage, I want to hand over to partner Samuel to give a summary, to give us closing remarks. Then Mary Francis will come in after. Thank you. Is it in?
Yes, so thanks once more. What I really needed to see that the participants are able to see. And I believe that going forward, we should be able to interact as regards to the areas that are still gray on your part as participants. Allow me to congratulate the team, Emma Opolot, Sam, and Mary Francis, that you have been such a good team to the extent that you have delivered your presentations, and now we're waiting for the questions that will come later after we have closed, but we have the desk open at HLB. Team, let's expect them. Let's expect our clients. Let's expect those who need more clarity, so that we are able to close whatever the case is, whatever the query that has been raised. And I believe that you have all gone through the chat questions as well. Thank you very much. And today's presentation comes to an end and
The
we are
ones on
expecting
the ones you
throughout
showed
the
me.
day, you
These are
the
bus, let's
participants,
meet
to
there.
be able to reach to us either by phone, or you can actually come to our office and be able to get the service you need. Thank you very much.
Thank you so much, Partner Sam. Thank you so much, Manager Sam as well. Thank you, Emma, for taking us through that presentation. I believe it has been wonderfully executed. And I would like to thank you all our participants for being a part of it. I can see that we have some questions in the Q&A and also in the chat. Let me start with those in the Q&A. This one has been addressed to Manager Sam. It says, hello, Sam. Thank you for the wonderful presentation. Kindly expound more on step 5 worksheets. Over to you, Manager Sam.
Well, thank you for that question. Okay, thank you for that question. You're asking to expand more on the worksheets. That is step number 5 in the accounting circle. Here, we say that in the audit, in the accounting process, after you've generated the unadjusted trial balance, you will have something called a consolidated PB that you will need to prepare. And in that step 5, you will need to have that table that has the client, the opening trial balance. Then you come to adjustments, and then you go to client's final trial balance. That extract is what you will need to have. But this we can do it practically when you come around. Since our program is continuing to 5, please come around and we do it practically so that you're able to appreciate. Thank you.
Thank you so much, Manager Sam. The next question, the first one was from Niwamanya Felix. I hope, Felix, you've got the answer that you were looking for rather. The next one is from Constantine Omoding Odiri. It says, regarding the preparation of the trial balance, my understanding is that by the time the external audit comes, the TB will have already been adjusted with most of the adjusting entries, like the depreciation, audit fees, etc., and the financial reports already prepared. From your explanation, do the adjustments to the TB and preparation of the financial statements have to wait until the external auditor is in place?
Okay, thank you. Thank you so much for that question. It is true that the adjustments will always be passed before the auditor comes. My answer to that is don't wait for the external auditor. Please pass the adjustments, and that is, I think, step 6. That is step 6 of our accounting circle. Pass the adjustments and ensure they have been approved and passed correctly. When the auditor comes, he will always ask, and in case it is part of his samples that will have picked up, then you should be able to provide the necessary documentation to him. Thank you.
Thank you so much for that as well. We have one more question in the chat, and that this one is from I think Patrick. I'm unable to see the full name. Patricia, I'm not sure. It says, what would be your say when you ask for sample staff or personnel files, but some are intentionally not provided by the client?
Okay, thank you. The name is PA. Actually, external auditor has to have access to all the information of the entity during the audit. So if the personal files are not provided to the auditor, that becomes an issue, and it will be raised in the management letter for management consideration. Thank you, PA.
Thank you so much, Emma, for that. Someone, this is Henry, he's inquiring if the presentation will be shared. Yes, the presentation will be shared, either on our social media platforms or via LinkedIn, but the presentation is going to be shared. And also, thank you so much for appreciating for the great job. Thank you. We are also, you're welcome. Being told there's another question that has come in. Let me check. This is from Hope Priscilla Namchango. Thank you so much for, she says, thank you so much for the session. Her question is, what happens after auditing a client for long, identifying errors like missing impairments, write-downs, non-compliance with regulations, misapplication of generally accepted accounting practices, payroll errors, and others? You highlighted them and went back to educate, if necessary, during the audit process, but no compliance. How do you handle? Do you report or step down as an auditor? I'm having a hard time understanding this. Oh, okay, manager has got it. Thank you.
Okay, thank you for that question. If you have audited a client for long and you find that you have advised the client every year, year after year, and there is no implementation, first of all, best practice requires that the period that you should audit a client maximum is 3 years. And you'll find that most entities have fixed this for 3 years. So if you audit more than 3 years, then you're due for rotation. For insurance companies, for financial industry, you find that they have fixed the period under which the auditor should take when auditing a client. That's what, so auditing a client really for long depends on how much. If it is more than 3 years and you see the client is not changing, then you need to disengage and do audit rotation for the client to move to another firm. Also, when the changes or when there is no improvement, when there is no improvement or when there is no implementation of the weaknesses in the management letter, now the right thing to do is to discuss with the client and request that they pass adjustment to have correct balances. But if they fail, then raise those issues again in the management letter, where you will say you continue to observe that the same weaknesses have again been made. But however, if also they are material, then I would advise you qualify the report so that you as an auditor, you're protected from civil and criminal liability if there are parties who are to make decisions based on that financial information. Thank you.
Thank you. Thank you so much. Thank you so much. Do we have any other questions? Please feel free to type them out in the chat or even to unmute your microphones and ask. Our team of experts is here to answer them all. Do we have any more questions coming in? Oh, someone is inquiring. I did not attend the Wednesday session. Will you kindly share those slides as well? Yes, those slides as well will be shared for the Wednesday session. Patricia is appreciating us for the presentation and saying she has picked so many take-homes. Thank you, Patricia. We are glad that you've been able to pick up many take homes and learn a number of things from our team. Are there any more questions? If there are no more questions, allow me to thank you all for being a part of our online discussion today on how to prepare for annual audits. Thank you so much for taking the time to be a part of it and participating and asking questions. We are very grateful. And this is just part one of the discussion. The discussions are still ongoing, but offline, but in person at our offices at HLB Jim Roberts, Uganda Road, next to the Magistrate Court, the building that has GT Bank. That's where the discussions are ongoing. Please feel free to come in and ask our team of experts. They are ready and willing to help you in anything that you need help in. Thank you so much for participating. And with that, allow me to wish you a lovely day and bring our webinar to a close.